Hey guys, welcome to the Daily Friend Show. This is of course, the weekly roundup. Remember, I did alert you to the fact earlier on this week that we're shaking things up. We're changing things. The Daily Friend Show now comes out on a Monday, Wednesday, and Friday as a podcast. Where do you find it? As I hear you asking Big Daddy Liberty, well, you'll find it on the Daily Friend website. That's dailyfriend.co.za. And of course, the weekly roundup, which is this show that comes out every Friday and is about a 30-minute show aimed at you understanding, hey, what happened in the week? What do I need to be aware of? And what you can do to get involved in the battle of ideas. Guys, remember, you can always support our work, and I'll give you that information at the end by becoming a friend of the IRR. But let me not waffle away. Let me introduce my guests in studio, colleagues of mine, very able colleagues who I enjoy being on the show with. We have in studio Mr. Gabriel Crouse, who of course is a writer and analyst here at the IRR. Gabriel, of course, is someone whose work you will find on the Daily Friend website. That's dailyfriend.co.za. Gabriel, hello, good morning.
Hey, it's Asihle.
Hello. And of course, Lo, I felt like I was going through like, hello, sort of,
yeah,
anyway.
French movie.
And of course, we've got our chief economist in the house, the head honcho himself who crunches the numbers, lets us know what's happening. Mr. Ian Cruickshanks, how are you doing, my good sir?
I'm doing very well, and I promise not to say on the one hand and on the other hand. That's like a weather report. It may rain and it may not.
Well, there you go.
We've got very definite views.
Guys, let's get straight into the show. You gave us a wonderful briefing here at the IRR, which really painted a comprehensive picture around where the economy is, what the numbers that we should be looking at are, and really the possible outlooks and the scenarios that we could be facing. So Ian, I'm going to let you take the floor, but I'm going to begin the question in this way. Ian, what is the outlook for the South African economy? Should we be happy and rosy as the politicians tell us because the new dawn is here and it will save us?
How do I laugh derisively? Well, let's just say, yes, we should be worried. The economy is in dire straits. It's not quite on its deathbed, but it's heading that way if we're not careful. What we're hoping for is a positive growth rate. At the beginning of the year, the government was looking at a growth of 1.8% in GDP. What's GDP? We hear about it. That's the sum of all goods and services produced in 1 year. And if we look at that, it was going to be 1.8%. They quickly changed that in January to 1.2%, and it's just been downgraded further to 0.6%. Well, that's hardly growth at all. And that is the problem. If we have to look then and say, well, what's it really mean to us as individuals? The population's growing at 1.8% per annum, so clearly whatever there is getting spread further, and means that the spread is thinner. And I think that really is what counts. And it's likely to carry on that way. We just have to look at confidence, business confidence. How can we expect the economy to grow, to jobs to be created? We're having job destruction rather than job creation when we've got confidence, the lowest it's been for a decade, amongst the business sector and amongst the consumers. Is that justified? Well, let's just say the business sector, the rise in liquidations is by 25% year on year, 25%
let's
more
just quickly explain
this
that
year
to,
than a year ago.
Sorry, and I was just saying, let's just quickly explain that to the viewer. When we say the rise in business liquidations, what does that even mean?
Business that have gone under, business that are no longer operating, that were operating a year ago and aren't anymore. Why? Because costs have exceeded revenue to such an extent that they can no longer get close to balancing the books, and they can't borrow enough. Nobody will lend them enough on the security of their business to be able to let them carry on. The risk is too high, and this is where we're looking. We're looking at a problem of risk and reward. Why do we risk capital? Because we think we can grow that capital. At the moment, we're looking at the risk. We're unsure that we can get the capital return. It's no longer, we should say, what is the return on capital? Now we're saying, are we sure of the return of capital?
Ian, before I bring in Gabriel on this particular point, we've seen a succession of really bad-looking economic numbers, hard data that's
Yes.
beginning to point to the fact that the economy is not going in the direction that politicians tell us that it is. And let's just quickly recap
right.
some of this data. M3 data came out basically, that tells us the story of how much credit is circulating in the private sector, and I'll let you correct me on that. Just before you chime in, we saw unemployment data come out this week, which saw South Africa unemployment go to 29%, the official rate, and of course the expanded one much higher. Talk to us about some of these numbers and really the real economy that the average South African is actually seeing.
Let's first of all say everybody in South Africa knows someone who's lost their job and can't find another. Why does that matter? Because individuals, consumer spending normally contributes over 60%, 60% of all economic activity, all goods produced, all services rendered. 60% of that comes from consumer spending. The consumers are on their backs, and they're not being allowed to get much off there. To what extent is this? Well, if you look at the increase in the money supply, the amount of cash sloshing around in the economy, it's growing at a slower rate. In other words, money is going back to the center, not out to the operational areas. You can't grow an economy that way. Credit creation, we're finding that the only area where there is some credit growth is in business. As far as consumers are concerned, which should be contributing 60% of all activity, it's declining. Credit is declining. Why? Because the risks are higher and the banks are getting more wary of lending. But nevertheless, that sounds like a job destruction, going the wrong way instead of creation to what we really need.
Gabriel, I'm going to bring you in here. 2010, South Africa had its World Cup. It was all lovely, fun and games. Shakira was here and she sang a very famous song that said, "My hips don't lie." We're hearing numbers here that just don't lie, do they?
Yeah. It's the waka waka.
Hey, man.
Those were good times. No, they don't lie, and I think that I suppose there are two sides to the story. The one is there are some things that you don't see, these immaterial factors, but the reason it's important to look at the numbers in aggregate is that they will tell you the story of what's going to be happening to you in a little bit of time.
Absolutely.
So if you see the rand starting to weaken, which is not one of the things we're flagging right now, but just as an example, if you see the rand starting to flag, that's not going to change the prices in ShopRite today, but it is going to change the prices in ShopRite down the road.
Absolutely.
If you see the numbers that we're looking at now, are they do not inspire hope, and the problem is that there is this cycle. There's this cyclical element of if businesses feel like they, as you say, it's not even about what kind of return on capital are they going to get, what on top of the original investment are they going to get, but are they even going to be able to get their investment back at all, or are they now living in a climate where the government just takes what they can? Then you have less business investment, you have less consumer purchasing, you have less general economic activity, more shrinkage, and that, of course, sends these signals that say to investors, well, do even less. And so each part of the cycle reinforces the other part of the cycle. And I think the Eskom CEO described it in terms of debt as the death spiral.
That's right.
But there can be a trust death spiral as well. And I suppose this is part of the reason that France in our previous show was trying to talk about what kind of push through you might get after the economy bounces. But we are definitely going down. And how far we have to go before we find the bounce is a question that's very hard
and
to
this
answer.
is where Ian's data or rather analysis had been quite instrumental in painting that picture. Ian, just to come back to you, Gabriel touches on the idea of investor confidence.
Yes.
When things look this gloomy, what are investors thinking as you take us through more of your data?
Well, let's say, why are they thinking whatever they are thinking, whatever direction they're going? I mentioned the importance of consumer spending.
Yeah.
Well, we just have to look at ShopRite. From a results point of view, they are looked on as the leading consumer spending destination. They're looking at earnings for the year being down between 14 and 20% on a year-on-year. In other words, if whatever they produced last year, up to 20% lower will be produced this year. Hey, that's got to be a sure indication that there's a heck of a lot of spending going on, and it's a heck of a lot more difficult to make a profit on it. You look at Massmart, that's a whole group of discount companies. And what are they doing? Well, they are looking at a loss of around 400 million rand for the year, for 1 year. Now, they can't carry on for too long. When they came to South Africa a decade or so ago, it's a question of whatever it is, we'll buy it. Oh, here's another investment outlook for you. We'll take it. We don't want to see it. We'll take it. We'll prove how well we can do. And what's happened? They're getting close to insolvency. Now, why is that? Because neither consumers nor business are spending as much as they did before. Now, what does that mean to the number of goods that is being transacted? Well, with inflation, prices go up. Therefore, for the same spend in rand terms, you're getting fewer goods. Well, doesn't that say what's going on? There are fewer people buying fewer goods at a value which is actually declining, and I think that says, as we were just saying now, job destruction rather than job creation. That goes towards the potential of a shrinking economy. What can be done about it? Can something be done about it? Yes, government could make it a more attractive investment destination by building efficient roads and railways and ports and so on. But they'd also have to see to their own administration. They'd have to see that they don't spend more.
I'm going to cut you short there just for one simple reason, is that we haven't told the other side of the story, have we? Which is, what are the things that really contribute to these bad numbers? We've sort of been speaking these numbers almost in isolation, as if the numbers themselves are there's clearly a policy environment in South Africa that is toxic to the point where those of us investors, whether we're local investors or international investors, are just not putting money into productive stuff. We're almost conserving money and playing a wait and see game. Gabriel?
Yeah, so I think that all of our viewers will know what it's like to go to a shop and you've got your money and then you're deciding what you're going to buy. And the real competition for your money is between the different goods. Am I going to buy the Coca-Cola or am I going to buy the Fanta? They're competing for me, for my money. And this is how investors are too. And global investors look at South Africa and they're thinking on the margins. Both Coke and Fanta, they're both liquids, they both come in 2-liter bottles, they both got bubbles, lots of sugar. You're looking at the marginal difference. What's slightly nicer about the one than the other? And in South Africa, on those margins, we just lose every time because I'm not really that impressed by if there's someone standing next to the Coca-Cola bottle saying, hey, this is so nice, this is so nice, this is so nice. When I open it up, it turns out it's sludge and gunk. And we've done a lot of brand managing. We've done a lot of going out there and talking ourselves up. But if you look on the ground, it's not the actual policies that really matter are, from an international perspective, BEE, big time. They are a high minimum wage. That means that paired with the low skill labor force that we have means it's hard to supplement what you need. It is not just a very volatile rand, means that if you want to supplement your business by getting machines to do some of the work, you need to be importing those machines, you need to be replacing them with parts. The rand can be sitting at 13 rand this week and 15 rand the next week because we've just made another wacko announcement about what we're going to do. And then, the hard fact that the government has blatantly stolen billions upon billions upon billions of rands and no one's gone to jail. In the last election campaign, the New Dawn leader was sipping champagne with the supposed big bad, only bad guy, right? That businesses must look at and think, what are you talking about? This is on the margins, you're losing me here. Although there's nice things, on the margins, you're losing me. And then the final one is this idea that, if I come and take some money here, it might just all be taken away. The Land Panel Report, it really is important to emphasize, the Land Panel Report speaks both of using equity schemes as a means of expropriation without compensation. So this idea basically of prescribed assets would be the softest version of it. Regulate so that you have to invest, if you're a local saver, have to invest your money in a sinking ship like Eskom, or or to say of a company that already exists, we're going to take some percentage of your shares at no compensation and give them to the people that we like. If you're a business on the margins, there's just no ways. I mean, you're not even on the margins. Even without the margins, you're not going to go there. But on the margins, for sure, you'd just rather go to another destination.
Ian, I want to bring it back to you because Gabriel really begins to break down what it is that informs the bad numbers that we're seeing. It is the ideology and essentially the bad policy environment. Ian, what does an investor think? Let's talk about big steel works or smelters, for example. I mean, we were talking about something off air, and you've made this point before. Let's say a smelting company, I don't know how to sort of frame that, wants to come to South Africa, wants to set up a major smelter. These things consume, 2,000 megawatts of power. But Eskom simply says, no, I can't give you the electricity. Is that not affecting the sort of investment we've been saying we need in South Africa?
Absolutely. That's chasing business away. We've found foreign investors who've been here for up to 100 years. And they say, you've got to promise us three things and we'll expand our business. The first is security of assets. We just not only want to know what return on assets, we want to know what will we have the return of our assets, of our capital, before we look at what those returns are. And we can't keep moving the goalposts. We can't keep changing the regulations, the operating area in which we are. Eskom has got to be able to provide to industry and manufacturing a guaranteed, cost-effective electricity supply. Well, we can't guarantee, we know, because of the amount of breakdowns that there have been. Cost-effective, heck, they ask for increases of 19%. The industrialist can't build that in to his cost schedule. It's just too high. And there's a third one.
But on that particular point, the weird thing is they ask for these massive pay hikes, but they're still running at a loss. They declared a 20 billion rand loss this week.
That's right. So before we go there, let's just look at labour. Labour's got to understand. Yes, the employers would like to pay them more, but there's a straight line, productivity and reward. You want more up there, we'd like to pay you more, but you've got to produce more goods per person. We've done. There was in the motor manufacturing business, there was a comparison made. What is the output per person of the average worker? Say 2 units per week or 2 units per day for the South African worker. In America, it's 5 units per day. In China, it's 6 units per day. Now tell me, they say, why should we open a new factory in South Africa? We can't do it on a globally competitively priced basis. And that is it. That's us not being able to enter the market, never mind carry on. And I think this is the problem.
If I can say something about Eskom and the tariff hikes. So I think Ian's point there is partly that, like, if you have a sudden spike of basically 20%, you can't build that into your cost scheduling. You've got liquidity problems. You're already in a pretty high interest environment, and where investor confidence is very low, it's hard to get the credit to kind of fill the kinds of gaps. So that's a nightmare. You should do it incrementally. But one does understand that Eskom should be charging a rate that kind of makes things square. And if that means that they have to charge a little bit more, at some point they need to charge a little bit more. The problem is not with Eskom charging more in and of itself, the scheduling question to the side. The problem is that Eskom doesn't seem to face up to the reality that in order for it to be a real business, it needs to be charging at a rate that it needs to produce electricity cost effectively enough that it can charge a rate that's paired to that. It needs to be adding more value than it's extracting. Just like all businesses, in order to make a profit, they can push the prices up, but that needs to be because their goods are better. Putting inflation to the side. Pushing the prices up in real terms means you're selling better goods, or it should do. Eskom, its real problem is that it's not productive relative to the amount of money that it's taking in. Why? It's not a surprise to any of us. The chairman, Jabu Mabuza, said we're 33% overemployed. If you look at their procurement history and ongoing procurement practices, they buy stuff at much higher rates than it's really worth because they've got corrupt tenderpreneurial tendencies, so to speak. And I'm very worried because one of the bits of the news of today and yesterday is that the chief rescuing officer has been appointed by Pravin Gordhan, and Pravin Gordhan has been searching the country up and down the hills and underneath the carpet, and he found the man for us. His name is Freeman Nomvulo, And he does look like Gordhan, an honest person. He looks like the kind of person who does not have his fingers in the till. He is an ANC insider. He was the accountant for the ANC in the 90s. He's got a history with Pravin Gordhan at SARS. Is he the person to fire or retrench a third of Eskom? Is he the person to hound out the corrupt tenderpreneurs in the procurement office? I don't think so. There's the history of him doing that either at SARS or at the South African. I mean, his great coup is that he disqualified Marcus Jooste as an accountant after the time when already was clear to everyone that this guy's a demon. I don't think he has the courage and the tenacity to pull off the trick. And I'm particularly disturbed that he's got this connection to Pravin Gordhan, because Pravin Gordhan, as good and honest as he is, he doesn't see the problem with Eskom as being too many employees that are inefficient. He has forced them to continue to get pay raises above inflation.
And just before I come to you, Ian, you're beginning to shape up what I think is the real problem here, and you're bursting the myth. We're often told online, in the mainstream media, by the elites that, we need to not worry. We now have a new president, a reform agenda is on its way. It's not here yet, but it's on the way. And it's... it's all going to be fine. We just need to just calm down and wait until we see what this 4D chess that Ramaphosa is supposedly playing. But you're now painting a picture of the same old individual being pushed into positions of power and influence within SOEs, and obviously we've seen in government. Gabriel, is the reform agenda, is there evidence of it?
I don't think I can't see it. I mean, if there is good evidence for this, I hope that some of our viewers will post it in the comment section, and then we can
love to see
and
it
we
too.
can have a discussion about that next time. I must say, I think that I was reminded of one of the really important books on South African politics of late is John Cain Berman's Between Two Fires. It's a couple of years old now, but I think that it is true now as it was at the time that it was written. The two fires, the one is race nationalism, and the other is a sort of socialist, very lefty kind of ideal of the government being your parents and taking care of all of your problems on your behalf and not really being able to do it. And the thing is, I do think that in Ramaphosa, we have someone who doesn't spend as much time appealing to the race nationalist part of the fire. Of course, his promotion of expropriation without compensation, his doctrine of original sin, his term, this very much does stoke that fire. But he spends most of the time sounding like a very friendly business guy, and he and Pravin Gordhan, certainly, they don't emphasize that, and I don't think they live in that in the way that some of the Zoomerites did. But there's this other fire, and it's no good sort of reforming from one fire into the other fire. And in fact, both fires reinforce each other. It's often the case that leftist, ultra-leftist socialist projects are bound to our people being the guys that we're going to protect. And, our people can be... we won't go into all of the historical precedents, but the left has certainly got a lot of nationalist, socialist, fascist in its past. And I think that in South Africa, I feel like this yearning. We're a very hopeful people. We're clearly a very hopeful people. My entire life, I've been told by foreigners that have come to visit, and I've seen it myself. We're extraordinary in that regard. But you must worry. The things that make you extraordinary can be a great strength in some circumstances. And when the circumstances don't work out the right way, that precise thing that was your strength can be your weakness. And I think our yearning for hope, maybe we're getting to the point where we're just a bit gullible.
Fellas, let me before I let you chip in, Ian, let me pose a question to you guys, and as we almost look towards final thoughts on this. We at the IRR advocate for classical liberal ideas, and we want to see a liberal democracy in South Africa that is characterized by people who are property owning, who are free, who enjoy liberties, and who live in an economy which is growing, it's providing opportunities for people to look after themselves and their families.
Does sound nice.
It sounds fantastic, doesn't it? But you'll have people who take exception to this and rather would love to see more of the same of what we have now, which is statism, a pining for socialism, and the nanny state, the government that controls everything and limits your freedoms. We obviously don't want that. Now, let me frame this question in my final thoughts. In the context of us building that society that I speak to, what are the top 3 reforms that we must see. We must see them now if we're to build a property-earning, prosperous, and a free society. Ian?
I'm going to start off with what we mustn't do.
Yes.
Going on to what you've just been saying. Hope. Hope is not a viable strategy. It's not reality. And that's what we've got to move away from. We've got to move towards reality. We've got to say to whoever's capital we want to utilize to build this country, which has immense reserves, immense potential, we've got to say, how do we utilize that? By giving security of those assets to the current holder. And we'll just assume that they should be the holder. We've got to make sure that we don't move the goalposts for operations, that we don't make it more and more increasingly difficult to conduct a viable business operation. And then we have to say, from a state-owned enterprise point of view, ESCOM, electricity, we've got to produce it, we've got to at least sell it on a price which will allow for a cost-effective, regular supply to industry and to the users of electricity. What business do we have that doesn't need electricity, from individuals to business of all sizes? And then we've got to get over this idea that the labour movement can ask and expect to get non-competitive based wage increases. We've got to say, if an operator in China can operate 1,000 moves a day, it's not acceptable that we operate at 200 moves a day. We've got to become globally competitive in every sphere, in every activity that we have, and without that, I'm afraid, we cannot produce a viable economy. And it's no good saying we hope for better days. Yes, we do, but that's not a strategy.
Gabriel, aimless hope?
I think, not hope, action, thought, diligence. First thing, expand property rights and strengthen it. The 20 million South Africans that live in former Bantustans that don't have title deeds, get them title deeds. Go and survey the 10 odd million hectares in the Eastern Cape and in Mpumalanga that haven't even been registered in the cadaster. Register that stuff, get people private property, an asset that they're already, something that they're using, but it's a dead asset because they can't invest in it, they can't improve it with a hope to sell it for more later or leverage it with a bank. That's a simple thing. It's not going to change everything, but you do that and you send a signal to the country that property rights are what the government is here to protect, not what the government's here to snatch.
Yes.
Number 2, drop the perpetual fixation with race as the proxy or the precondition or the way to understand everything. A person is a person through other persons, not a whitey is a lily through other lilies or whatnot. Huh?
And our research shows this, that South Africans, this is generally what South Africans want.
Whichever political party decides to really go with this properly, not to sort of apologize for it sometimes, but to really own it and say we are proud of this, that political party is going to see a nice bump in its support locally, internationally, from the grassroots to the tallest trees. It's going to be very nice if anyone has the courage and the humanity to take seriously what the basic sort of principle is. And the third thing is take responsibility. Taking responsibility means connecting the dots between the ideas, cadre deployment, statism, and the implementation of those ideas, and then the bad results. Absolutely. These numbers that we started this podcast with, a shrinking GDP per capita, increasing unemployment, reduced consumer spending, and I might add Momentum Wealth's report, its household wellness report, it claims it's evaluated 450 billion rand of private wealth in this country wiped out last year. These kinds of figures did not come out of nowhere. They did not come out of a global recession. There isn't one. They did not come out of emerging markets around the world not doing well. They're averaging on 5%, near on 5% growth. Exactly. There is something that needs to be evaluated, that needs to be taken seriously. And I have heard Ramaphosa say we had a lost decade, but I haven't heard Ramaphosa say which one of our policies caused that lost decade. I just see him and the new reformist mover perpetuating this idea that it was one man, Jacob Zuma, and one family, the Guptas, that were somehow responsible for sort of dropping a hair in the soup and making it a bit smelly. And if we can just chase them away, but not too far either, not so far as jail, for example, then everything will be okay. No, taking responsibility means serious people at the top of leadership in whatever party connecting the dots between what they put into place and what the results have been. And if it doesn't work, then you change.
Fellas, thank you very much. We will end that conversation here. And I think for anybody who was listening, it rightly puts them in a better position of understanding just exactly how much of a problem the economy is, or rather a crisis the economy is in, because I need to describe things aptly, and also how people need to be aware of that and essentially protect themselves and their assets and their families. We're going to obviously put this conversation on the Daily Friend website. Remember, you will always find any of our content on the Daily Friend website. That's dailyfriend.co.za. And I think this conversation was eye-opening for a lot of us, to see beyond the rhetoric, see beyond the smoke and mirrors from the political elites, and actually understand that we need to begin to shift the bad ideas out of the way and actually put in place the sort of good ideas that lean on the side of liberties, that protect your rights as an individual, and that see your family getting opportunities to advance and to live in a liberal democracy, or one defined by a growing economy, prosperity, and opportunity. We all want this, but there are certain ideas that we cannot tolerate if we are to have that sort of society. Guys, on that short message, let me say thank you so much for watching once again. Remember, you can support the work we do here by becoming a friend of the IRR. That is as simple as SMSing your name to 32823. Terms and conditions apply. An SMS will cost you R1. And if you really don't like SMSs, you're thinking it's old school, that's not me, well then find us, of course, online at irr.org.za/join. And you can sign up a monthly debit order of 90 Rand there to support the work and our analysts here at the IRR. Guys, thank you so much for watching. Remember, the Daily Friend Show comes out 3 times a week as a podcast. It's your lunchtime briefing every Monday, Wednesday, and Friday at 12. And of course, the flagship show, the weekly Roundup, on a Friday at 10 a.m. Guys, thank you so much for watching. We'll see you next week.